if I can piggyback, Brett, on what you just said from a tax situation, this is exactly why at Beverly Hills, I set up a private meeting with Richard Wilson and Dan Pinkerton of Pinkerton Retirement Fund. He has AUM of $2.3 billion and is the top 1%.
Let's imagine that David sells for $100 million. I don't know, or more, right? I don't know what it's going to sell for. You maybe have estimates on that, on the silver and the gold. Just kind of give a feel for like how those numbers break down on an average dividend. What will it look like if the company were to hold for a long term, or if it were to get sold?
Well, the answer is I don't know. But when I don't know something, Brett, I refocus on what I do know. And here's what I do know. The Silver Pietà, which was our first Vatican piece, has appraised officially at $172 million. Now, we don't know what it's going to sell for, and therefore we don't know what the dividend's going to be. But let's say we sell it for 50 million, only 50 million, less than a third of its, value. What do we do with that 50 million? Well, what's our use of proceeds? We have a decision to make with the officers. Well, we'd like to build a new foundry. Well, that's $5 million. What else will we do? Well, we want to fulfill. We have, last year we did about 14 million in revenue. But this year, for 2024, we already have 19 million in open purchase orders. So we want to fulfill that. So how much is that going to cost since we own the inventory while it's being sold? For example, in our galleries, as we talked about, it's on consignment and we split 50-50. So we still own that. So let's say that's another 5 million. So now we got 40 million left. So you divide 40 million by 282 million shares, and now you've got yourself a potential dividend. Now, that's for the Silver Pietà. Well, let's say the Jackson Pollock, signed in 1951, appraised at I don't know, 150 million. Let's say it sells for 50 million. Same scenario. And then you've got the Belvedere Torso at 65 million. You actually saw Michelangelo's wall hanging sculpture, the only one that's in his home in Florence. You saw that piece, and that's 45 million. So that may sell first. Or they may all sell together to the Louvre. You think I'm going to say Paris, France, but I'm going to say Abu Dhabi, because they bought the rights to the Louvre name. And they are the world's largest, newest museum looking for pieces. And we have an interested party, let me say, that we are in discussions with, who's a Muslim. And he's interested in the Pietà. And my question is, why? It's the most iconic religious piece ever created in history. And he looks at us and he puts up a finger. And what does that mean? There are 300 sheikhs and princes that I'm in competition with, and I will have the only one ever created in history. It'll be mine. That's why he's interested in it.
Absolutely amazing. So cool and so exciting. And by the way, I think it's actually a good answer. And this is part because it's art and it's fine art and it's so highly appreciated. And so the key is some of them are going to sell quickly. Some of them are going to take longer. You're constantly creating new product, and the revenues are going to fluctuate, and sometimes it's going to be larger. But to me, I would love to be an owner of the business for long term. In fact, I'd love to just continue to have you guys do an amazing job of telling the story. But of course, at some point, there's going to be an exit. A part of also what we do on the podcast is talk about capital gains tax, right? And estate tax. And that, at a certain point, there's a time to plant, water, right? Cultivate and harvest, right? And that's a big challenge with a lot of people who've gone from 1 million to 1 billion, and or building up, having that tax flow exit strategy. And I just want to remind our listeners, if you're listening to this, you can. We have a solution for that. And in fact, it's an amazing solution. One of our companies called Capital Gains Tax Solutions. You can defer the capital gains tax. You can eliminate the estate tax on artwork, on collectibles, cryptocurrency, businesses, real estate, but especially artwork, because artwork is taxed at even higher rates. It's massively taxed. Okay. So be very aware of that. Before you are to sell, you can defer the capital gains tax using a deferred sales trust. You can also eliminate the estate tax using a DST 2.0. This is massive because the stepped up basis does not solve for estate tax. Okay. And so you can go to capitalgainstaxsolutions.com to learn more about that. But I just want to remind all of our listeners, as you're building to billions, make sure you're also building a $1 billion tax flow plan, because when all of these sales start happening, there's a massive amount of tax and you don't want to get caught paying too much of your fair share. If there's ways to go around that, just go to capitalgainstaxsolutions.com to learn more. That being said, Mr. Michael, we are running out of time. Are you ready for the lightning round?
One thing I want to mention, though, if I can piggyback, Brett, on what you just said from a tax situation, this is exactly why at Beverly Hills, I set up a private meeting with Richard Wilson and Dan Pinkerton of Pinkerton Retirement Fund. He has AUM of $2.3 billion and is the top 1%. And what he and I and Richard and Mark and I are working on is the establishment of the Michelangelo Fine Art Fund. And that is critical because that then combines all the assets we have now, bookable, 3.2 billion, with what we're going to have, 5 billion. And people then, like family offices, can come in and put in. I mean, it takes me just as much time to raise 100,000 as I could raise 5 million or 10 million, because the family offices can write those checks. And that then they can then buy a unit, be it 5 million or 10 million or 50 million, of a $5 billion fine art fund. And that dovetails with exactly what your company and Capital Gains Tax Solutions is doing. That's why I got so excited.
I appreciate that. And by the way, it also works for shares in stock, public or private. You can assign the interest, sign the shares, sell the shares to the trust prior to the close. It's really cool and exciting. In fact, we wrote a book about it called Building a Capital Gains Tax Exit Plan while we were just talking about it. And in fact, we had Kevin Harrington from Shark Tank, who also was at the Beverly Hills speaking at that conference, and he didn't even know you could do it on public stock. Right. Ours also works for public stock, which most strategies don't, but it definitely works for private stock or public stock or artwork or crypto or business or real estate sales. It's all of it you want, but you want to make sure you have that plan in place. That being said, you can pick up the book, Building a Capital Gains Tax Exit Plan, on Amazon.